Today I'm sharing a very easy but very powerful mechanical strategy that can be used in London and New York session for any financial market, either forex, indices or crypto. You will have a specific time to be in front of the chart and I'll give you a step-by-step and a checklist to use the strategy. Make sure to stay until the end of the video as I'll provide you with a sheet that has all the checklists and the steps. Let's get into it. Before we dive into today's video, if you're looking to secure up to $4 million in trading capital, look no further. Bespoke is one of the best firms in the industry now. Trade at your own pace with no time limit, very low spreads and slippage, request a payout in 14 days and get it in less than 24 hours, balance-based daily drawdown, and much more other features. For a special 10% discount on all accounts, use code MULHAM at checkout and find all links in the description. Let's continue. Okay, so before getting into the details of the strategy, we need to know a few things, and those are the prerequisite of the strategy. The first thing is liquidity sweep. So we should always know what a liquidity sweep is, what happened after taking liquidity, price always reverse to the other side, and the market always goes to the to the liquidity. We should already know the liquidity concept and the inducement concept, and you can watch my other videos in order to proceed if you don't know. The other thing is displacement. What is a displacement? Displacement is, let's say we have, and price was going down, and suddenly what happened is price take a liquidity and then give me this aggressive move to the upside. Most likely we want to see this aggressive move over structure. So this way, we don't want to see something like this to call it as a displacement. Price is going down and then a displacement here, but it's not above structure and then price keeps going down. This is not something we want to see. We want to see displacement or aggressive movement or momentum over structure. Okay, so what is a displacement? It's simply aggressive moves, and most likely there will be a fair value gap in this displacement, most likely, not always. And the third thing that we should know is Fibonacci or OTE. You should already know this if you're watching this video. You should know that when you're applying your fib, you should apply it from a low to a high only when this high is confirmed. So when we have, say, a displacement to the downside, now we can apply our fib when we have a low and a high. That's all you need to know for now. This is a very easy strategy for beginners. You don't know a lot about trading or especially about SMC or ICT. This is a very good strategy for you. So what is the strategy? It's basically, let's say price was going down, okay? And then there was a liquidity sweep, okay? Right here. This is a liquidity sweep. And price went back to the range. So this was our range, okay? And there was a liquidity sweep here and price is back to the range. Now, what do you want to see after? So first of all, timing. We are looking for trades at 2 or 7, and those are AM EST. So either 2 or 7, and you already know that London kill zone is 2 to 5 and your kill zone is 7 to 10. What does that mean? That means we are looking for a liquidity sweep at those time zones or at those, the start of the kill zone of London and New York. Now, those are not exact times, give or take 30 minutes. So in order to make it clear, you're looking for the sweep to happen 30 minutes before at 2 a.m. or 30 minutes after 2 a.m. And the same applies to the New York kill zone. However, you only want to take your setup after 2 a.m., after 7 a.m. So if the sweep happens before 2 a.m., that's okay. If the setup happens before 2 a.m., then we're not going to take it. It's okay for the sweep to happen, before 2 a.m., at 2 a.m., or after 2 a.m., but we only enter the trade after 2 a.m. and after 7 a.m., okay? So let's say 7 a.m. or 2 a.m. is right here, okay? And the sweep happened either after or before, even let's do it here, okay? We want to see a displacement over structure. So our structure is this. This is our last high before the sweep. If there was a high here, then we're going to consider it. But for now, this is our high. So we want to see a displacement above the structure, above this high. And after that, we're going to get our fib from the bottom to the top. And we're basically going to wait for the 62. So this is my OTE, 62 to 79. You can take from some, sometime price is gonna reach at 70, price can reach at 79, but most of the time, and you really don't want to miss a lot of trades because that can affect you psychologically. So maybe take all the trades from the 62 and avoid the 70 or the 79, even though it gives a better reward to risk. However, only stick with 62. You want to see this happening, price coming to the 62. You take your trade here, just a buy limit, and then you target 27, you target the 62, and you target the -1. Now, not every time price will go to the 62 and the -1, very straight. You want to take some partials at the 27, maybe move your stop loss to break even right here, and then wait for price to go to the 62. If you don't see any retracement from those levels, then know that price is going up more and more. If you see a displacement and it goes deep, then you should move your stop loss to break even. Sometime price will go aggressively to the upside to the -1, and you don't want to miss all this profit, So 27, your main target, 62 and -1, those are partials, okay? Now let's assume that, the displacement, let's say the sweep happens here, and then price went up, okay? Just like this, with a displacement above the structure, and then started to go down. Whenever you see price going down, like the first second that you see price going down and kind of retracement to the downside, you'll take your fib from here to here, okay? And you'll wait for the 62, so you'll have your limit order here. Let's say that price kept going up, okay? And it went here and then it showed another retracement. What are you gonna do? You're gonna take your fib again from the same low to the new high. And now you'll expect that, okay, price is gonna go down here. You're gonna adjust your limit order to have it on the 62. If price goes above more, you can adjust your fib. However, you don't want this to take a lot of time. You don't want this structure here to take a major liquidity, okay? So let's say price kept going up here and took a major liquidity like a previous day high and then started to go down. You don't want to look for the same trade, especially if it takes this liquidity, major liquidity, and then it started to go down and it's kind of late already. So let's say you're taking 7 a.m. and it's already 10 or 11 a.m. You don't want to take this trade. Why? Because the major liquidity is already swept. Also, time is too late. So you should always think about it this way. However, if the sweep just happened here and then price went up, came down, you take your fib. If it breaks the high again, then adjust your fib and just do this every day. Now for the fib settings, okay, so let's take the Fibonacci from here to here. Your settings, you can copy those settings, okay, 0, 62, or 61.8, whatever you call it. You can disable those, but I'm just having them because sometimes I use it. It's, it acts like another line of defense for you. -62, 1, -27, -1, and the 0.5 for the equilibrium. The main ones that you focus on for the strategy is the 62, -27, and then it goes up to the -62 and -1. We're gonna enter here. We're gonna target, this is your main target, and then you're gonna take some partials here or here if you see a momentum to the upside. So let's say price came to your entry, and then price already went above the 0. There was no retracement. You targeted 27. If price just keeps going up, you already take your partial here, and price goes up. You don't see any kind of a big reaction from those levels. You can take partials from all of those levels, but mainly the 27. Okay, so going over the first example, this is a trade that I took myself. I'll try to just show you the trades that I took myself, other than just going and showing random examples. So what do we see here? This is 1:30. This is the London kill zone starting in half an hour. So you come here and you get prepared to your day. When you come, so let's say you just came at 1:15. What do you see here? You can clearly see that, okay, there was a sweep of this low. There was no big displacement, and the structure here was very bearish. But this is not our timing. We're only focusing on this time at 2 a.m. So we do have this low that was just swept. Okay, so we have a sweep here, and then now we're only waiting for a displacement to happen. We kind of have a displacement now, but this is still not enough. So I'll play one more, and we can see that there's a kind of a displacement to the upside. Where is my structure? It's right here. So I want to see a displacement above this point, actually, not just here on this, you know, internal structure or a small structure. So I want to see a displacement above this point, and we can see it here. So this is my displacement, and we can see here that, okay, there was a kind of a retracement here. Price can, this is a potential swing high as of now. We have this retracement here. We take our fib from the low to the high right here. Now we can see that the 62 also aligns with the fair value gap. So that's a good thing to see, okay? Now, I'll have my buy limit because sometimes price immediately go down. So buy limit here, stop loss at the low at the 0, and then take profit at the 27, 62, and the -1. Okay, whatever you prefer, make sure to take some partials here because sometimes price only comes to the 27 and then goes down, sometimes to the 62 and then goes down. So you should take some partials and then move your stop loss. Now, you see, we have another high created. So this was not the high, this is the high. So I'm going to adjust my fib to the high, just right here, to the new high. The low is the same. I'm going to adjust my limit order to here, to the 61. Or the 62 actually. Price comes to the 62 and then react and goes deep into the 70.5 and then react again, and price doesn't come to the 27, so you're still holding, no problem. And then price goes to the 27, you take some partials here at the 27, and then you see there is no kind of a retracement at those levels, so you take some partials here, and then final partials here. And price still keep going up right here, but you're enough with a -1. If you only take your profit at the -1, it's gonna be a 4-1. If you take your full profit at the 27, this is 2.3. Having a consistent 2.3, 2.4 every day, it's better than just catching one 10-hour trade. Another example, and it's on pound dollar and on the New York Kill Zone. So this is 630. So 630 is right here. We don't see anything as of now. There is no clear liquidity sweep. Price go down. This is 7. So there was no liquidity sweep before 7. We're gonna wait a little bit to maybe take this high and then displace it down. So there is a liquidity sweep here right now, just after 7. So if we see a displacement to the downside, then we can take a short position. So still there is nothing. Now we can switch from taking this because there was no displacement to the downside. However, let me remove this. Okay, what do we see here? We can see that there was a liquidity sweep here with a displacement, other than just a random liquidity sweep without a displacement. So we do have a displacement here to the upside. So what do? We're gonna take our fib. Usually I don't take a trade with a single candle, but this is a very big candle, so I would consider it, or I'll just wait for another candle to form, just as a confirmation. But this is also possible. If there is just a one big candle, you can take a trade based on this one. So your 62 is gonna be right here. However, it doesn't reach the 62 and then it creates another high. So I'm gonna adjust my fib to this high. We do have the 62 here. So now we're gonna take the 62. But most likely, because there is a liquidity of this candle, the previous candle low, just below the 62, there is a potential that, okay, price can go lower than the 62. However, we're sticking with the rules. When you master the strategy, then you can kind of adjust and play with it, depend on the situation. But for now, let's do this. to the -1, and we're gonna take most of the profit. I would say 50% of the profit here on the 27, and then move your stop loss and take some partials at the 62 and the -1 fully. And you can see that price goes to the 62, just right here. It keeps going down and then goes up. So it goes to the 0 and then to the 27. So now your stop loss should be at break even, just right here at this level. And the price goes to the 62. So it's already 12. So you should, maybe close your position or just leave the stop loss, trail your stop loss at this low. And then price goes down. So this is the current time. So this was on Friday, and this is the end of the week. So it did go to the 62. It did not go to the -1. And the market closes before reaching this -1. So, okay, so this example is kind of tricky, but I'll try to put it all together for you in an easy way. But I'll also include all of the things that I was looking for when I was trading live, because I took this example, or actually this trade live, and I shared it on the Discord for the people, and a lot of people entered. So what I'm gonna do is I'm gonna go over everything that I was thinking about at that moment. So this is more like, all of the details that I was thinking, unlike the first two examples where I was just covering the basics. So what do we see here? This is 2 a.m. The only raid or the only liquidity sweep that I see is this one. This one happened at midnight. So it's not the best one. Okay, it's not the best one, but I could still, if price give me, there was a displacement, price gives me a displacement above this high, then I would consider it if the entry was after 2. Still, 2 is not here, and if there was an entry available here, I'll not enter. Why? Because it's before 2. So I'm gonna wait. Maybe if there is also a liquidity sweep above this point, and then price give me a displacement to the downside, I would consider a short position. But for now, it's still not clear. Maybe more into the upside because of this liquidity sweep, but let's see. There was this, kind of a liquidity sweep. It's not the best one. Why? Because this is not a swing low on the 15 minutes. It is on the, maybe on the lower time frame, but it's not on the 15 minutes. So I'm gonna ignore all of this. And okay, so now I'm gonna take my fib, and that's what I've done, because now it's already 2 a.m. and we can see there was a liquidity sweep here and price going up. And just to make this clear, maybe there was a liquidity sweep from here too. There is no displacement. So what I'm gonna do is, just because of this liquidity sweep, very clear one with a displacement, I'm gonna consider this long position. So it was at here and then at here. So this is the potential confirmed high here. What do you see here? That's what I was thinking. So the first thing is at the 62, we have this inducement. What do we also have? We have this fair value gap, and we have this, this swing low or inducement barely touching the fair value gap and going up. What do I expect now is price to take a liquidity from this low and then started to go up. So you see how we can combine everything together. So that's what I was seeing. Price to come into the 62 and take this liquidity. There is a liquidity just at the 62. So most likely price will come at the 62 and then goes up. That's what I was thinking, and that's what I've done. So have a buy limit, just to have a better reward to risk. You can have it just slightly below this. Why? Because we know that this liquidity is going to be taken. So maybe have it here, stop loss just below this point, and you can also have it below this point here, targeting 27, and then all of those, maybe just at this high, because we have a clear liquidity. Maybe you can go up to the -1. Okay, but we're gonna take most of our profits at the 27. And this is what happened. Price goes there, take this liquidity, and then give a reaction. And there you go. In one single candle, you get up to the 27. And then price again to the, so if you take 50% here and you move your stop loss to break even, so you're almost stopped out here. I mean, you are stopped out. However, if you hold, price goes to the 62 right here and to the -1. So this is a very nice trade. It involves a lot of the things, inducement and PD arrays, this fair value gap. And this inducement was at the, a very major level, which is the 62. And that's what I was thinking about at that time. Honestly, I took some profits at the 27, and then I was stopped out at break even. Why? Because I moved my stop loss to break even after the 27. Now, let's say that you already mastered the strategy and you want to take it to the next level in order to have a higher win rate and have a higher probability trade. Then what you can do is this. The first thing is, let's say that price was coming down. This was your sweep here. First of all, this liquidity sweep is going to be a high probability trade if this sweep was at a previous PD array. So there was a previous fair value gap here, and the sweep happened into that PD array and then started to go up. Why? Because this would be a support for you. This would be a line of defense. So that's a good thing. And after that, I'm going to drag my fib from the bottom to the top. And we can see that, okay, price went to the 62. But another thing to look for when we are here, price was going down, look for other PD arrays inside of this leg, the displacement leg. So maybe there was a fair value gap at this level here, and also another, let's say, another PD array, which is a breaker block at this point. We can see that those PD arrays are going to support price to go up more and more when they are aligning with the 62. So that's a good thing to do, is have a fair value gap aligned with your 62. Now, another thing that you can apply is, to have a draw on liquidity. Let's say on the 4-hour, if you're trading the 50 minutes, your draw on liquidity on the 4-hour tells you that there is a big fair value gap on the 4-hour that is going to this level. Now, taking a trade here, aiming for this level, is going to take you to the 62. So that's a good thing to do. You'll know that 4-hour price is going here based on your draw on liquidity analysis. There are more stuff to improve. If you go to my Discord and to Mulham Education channel, I shared a full PDF that has all of the high probability things to do, and also the checklist and the steps and a full explanation of the strategy. Make sure to have this one and maybe print it and have it every day in front of you. Okay, that's it for the video. If you guys like this type of content, then make sure to hit the like button. That would be a big support for me. Subscribe to the channel and leave a comment. Also, tell me what you want